when you're selling a business, should you sell the stock or should you sell the asset? I'm Jeramiah Townsend, business broker advisor. In this video today, I'm going to help answer the question: when you sell a business, should you be selling the business assets or should you be setting it up as a stock sale? Now, the simple answer is that most small businesses sell the assets of the business, and a few of them sell, especially the larger companies, will sell as a stock sale. Now, an asset sale refers to the sale of individual assets of the business, such as property, equipment, intellectual property, rather than the sale of the business itself, like the stock of the company or the corporation. A buyer would come in with their own new corporation. They'll take over your business name and set up something as a DBA, doing business as. So that's what they'll do in an asset sale. And that's generally what a buyer wants. And the reason a buyer wants to do that is because it limits any liability and removes liability from the buyer. That's number one. And number two is there are some tax benefits for writing off the assets of the company, so they can depreciate the assets of the company faster in an asset sale. Now, on the other hand, a stock sale is the sale of the literal corporation or LLC, whatever form that stock shares the company. The buyer acquires ownership of the company and all of its assets and liabilities. So all of the bank accounts, like the account setups, the EIN numbers, the employer identification numbers, all of that information. So oftentimes, if you're dealing with if you do with an asset sale, you have to set up a new credit card processor. But if you want to maintain the credit card processor, you do a stock sale, then the buyer can maintain the credit card processing in place. So there are a couple of different variations there. Now, the choice between selling a business as an asset sale or a stock sale depends on lots of different things. The tax implications, the structure of the business, the buyer's goal. Sellers generally want to do a stock sale, but if your business is doing less than 5 to 10 million in revenue, almost exclusively those are sold as asset sales, just so you're aware. Now, an asset sale can offer more control and flexibility over which assets are sold. So let's say you have a landscaping business and you have a pickup truck that you want to maintain ownership of. So when you sell the business, you keep that pickup truck. Or maybe you have extra vehicles, extra equipment, sometimes liabilities. So while a stock sale offers the buyer full ownership and control of the business, oftentimes for both parties, an asset sale makes a lot more sense. Now, it's always recommended that you seek advice from a professional, from a CPA, sometimes a lawyer, business broker such as myself, and we'll do the best we can to give you the best options for you at the time. Now, there are always extenuating circumstances, and there shouldn't be a major, you're not going to go wrong terribly one way or the other most of the time. Every once in a while it matters, but you're not going to go wrong. Just remember, most of the time, business, if it has under 5 to 10 million in revenue, will sell as an asset sale. And if it's larger than that, that's when you see stock sales more regularly. And a lot of it has to do with more liability. The buyer doesn't want to acquire the liabilities of the previous owner in case there's any bad debt, if there are tax debts, liens, obligations, whatever. They want to make sure to start with a clean slate so it's safer for them. I'm Jeramiah Townsend, business broker advisor. As always, like, comment, and subscribe on the video if you would, please. I look forward to talking to you more soon.